legacies over 200 years.
Welcome back. Well, the Nifty is holding at around the 17,500 odd mark, but it's time for our special segment, D Street Chatter, where Nimesh gets us a bit of an insight into what's going on in the dealing rooms. Nimesh, take it away.
Thanks, Nigel. So the last half an hour is going to be a little hectic as well because of the index rebalancing. So that's going to add to the volumes as well in today's trade. But in terms of FI volumes, it's largely mixed. But the bigger action is in the mid cap and small cap space, and that's where there is a lot of that's the space which is well bidded as well, is what I understand. In terms of sectors, private banks is something where there is a lot of focus. Selectively, there is a bit of buying back in cement names, some bit of fertilizer names as well. So it's not like one particular sector which is in focus, but there are some multiple pockets which are doing good today. I guess from a technical point of view, we are heading towards that crucial resistance of 17,550 on the Nifty. So that's something to watch out for. But we have an expiry as well tomorrow, so that will play out in terms of volumes as well. But I guess today's trade is largely on back of index rebalancing in the last half an hour and a bit of buying back in private banks, as well as some select cement and fertilizers. Those kind of sectors are doing good today.
Okay, but now's the meat, right, of the conversation. What are the stocks you're looking at, Nimesh?
So today the top stock is Tech Mahindra. While the IT index is in the green and most of the stocks are buzzing, that stock is down 2.5%. One of the reasons is there is selling pressure at the FI desk. But interestingly, today Citi put out has opened a 90-day negative catalyst watch on the stock. So I guess the earnings will be quite important to track from here on in Tech Mahindra. So that's the first stock. The second stock is IDFC First Bank. Last week I did hint about some large FI seller in that particular stock. There were multiple block deals today. Looks like it's a clean out trade from that one long only FI. And after that, you've seen a bit of pullback in that particular stock. I'm talking about IDFC First Bank. So that's the second one. The third stock is Page Industries. Again, it's buzzing in trade today, almost at 52-week high on some good volumes as well. And I believe CT started anticipating some strong quarter from Page Industries, and hence you're seeing a bit of a move there. So that's the third one. And the last stock is Max Healthcare. Every now and then we keep hearing this chatter about a large block deal. One of the private equity investor owns a large chunk, and there is a very high possibility of a large block coming in Max Health very soon. So that's the last stock on my radar.
All right. Nimesh, thank you very much for that. So those are individual stocks we will watch out for. There are flashes at the bottom of the screen. This is, of course, with regards to the gas price revision, which is going to come into effect from the 1st of April, that is Friday. And this is source-based information which PTI is putting out. I mean, the formula is decided according to the prices will be determined according to the formula. It's a mix of a variety of different varieties of gas from different locations, and there's a weightage assigned. So it's a set formula, as the CLSA analyst this morning also explained. But we're putting out some numbers. This is from PTI. Reliance is set to get a record price of $10 per MMBTU. ONGC may fetch more than double the rate for its Mumbai High and other fields. This is on expected lines. I mean, the price that they get for gas was expected to go up 100%. So it's not unusual. Government to announce the revision, I think, which is sometime tomorrow, is what the newsflash also says. So we'll come back to that in a bit from now. Vishal Malkan is with us with some buy today, sell tomorrow trades, or vice versa. Vishal, what do you have?
So I'll go with buy today, sell tomorrow, and that the first pick would be Ramco Cement, which is showing a good momentum today on daily as well as hourly chart. It has made a higher bottom on the daily chart, and it's crossed that important level of 755. Closing above that is a good sign. So I think this is a best bet, one of the best bets for BTST buy today, and for a target of around 780 to 85 for first half tomorrow. And the second one would be IRCTC, which is again showing a good breakout on the daily chart as well as on the hourly chart. So I'll go with a buy on that with 800 plus levels in the first half tomorrow.
Okay. By the way, we were talking about how platform companies like Zomato are up 10%. Nykaa doesn't want to be left far behind. So Nykaa is also up almost about 5.5%. Looks like it's a comeback of these platform companies. But then let's move on. API companies are on our radar. There are fresh lockdowns in China. Ekta tells us the impact that this would have. Ekta.
With China undertaking fresh lockdowns due to their zero COVID-19 policy, the fear is that it might impact supplies of key starting materials and active pharma ingredients, the inputs that go into making formulations or drugs. Remember, India imports around 70 to 80% of their key starting material and API requirement from China. Feedback from API companies as of now, however, is that there is no impact on the availability of KSMs or APIs from China. Some ports, for example, are functional, hence overall movement of goods is taking place. However, it is slow. Inventories are currently either in the port or on the sea. However, they do sound a note of caution. They fear shipments could get impacted April onwards, and concern will be when forward covers reduce. There will be more clarity, however, in the next couple of weeks. However, it is unlikely to be like 2020 and the supply chain disruptions that were seen then. Companies estimate the worst case is an impact of around 20 to 25% on production in May, but no shutdown in plants. Lastly, a few examples to illustrate our dependence better. Metformin, which is a drug used to treat diabetes, India has almost 100% dependence on its inputs from China. Currently, prices are at around 350 rupees per kg and could rise by 20 to 25% in case of non-availability. Similarly, for paracetamol, the pain drug, India has around 50% of dependence on a key input of the drug, PAP, from China. Prices have been impacted due to higher COVID-19 cases as the drug is used to treat COVID-19. Paracetamol prices have risen to around 700 rupees per kg versus 680 rupees in just the past few days, due to the rise in COVID-19 cases. However, it is still off the highs of around 850 rupees per kg it had hit in the peak of the pandemic. Ibuprofen prices, according to companies, are not likely to see much of a rise from the current $9 to $11 per kg, despite 20% of raw material from China, as it is not used as much when COVID-19 cases rise.
Okay, all right. Thanks a lot for that, Ekta. Well, we have Sudeep Bandopadhyay who joins us. Hi, Sudeep. Sudeep, you heard what Ekta had to say. Some of these API companies in the near term, they may not face much of a headwind. The input costs are going up and availability could become a problem going ahead. And I briefly remember speaking to one such company, that was Supriya Life. They suggested that they're focusing more on KSMs as the key supply materials, and they could potentially be beneficiaries going by what they say. As we speak, the stock has moved to the high point of the day. Your take, Sudeep, on these API players? Some of them have seen a big rally from the recent low. They've seen some profit taken from the top as well. How would you approach them?
Hi, Nigel. I think the concern is genuine. There is a problem in Shanghai. That's the largest port as far as container traffic is concerned, and the entire city has been locked down. At this stage, what we know is this lockdown is till 5th of April. If the lockdown gets lifted post that, I think things should not be too bad. Supply will get restored. But if there is an extension of the lockdown, I think problems will start surfacing as far as supply is concerned. And obviously, the local manufacturers will benefit. Overall, the industry will be under pressure because costs are going up, and costs will continue to go up for some time. Also, there is an effort going on as far as Indian industry is concerned to look at import substitution, look at replacing China. But I think that's a very, very long distance away. So for some time we are dependent on China, and there will be these kind of supply issues intermittently, considering the geopolitical situation we are in. As far as local API manufacturers are concerned, I think it's a great opportunity for them to kind of scale up their business and ramp up their bouquet. If they can do that, I think it's going to be good. But short-term fluctuations will lead to short-term price gains, not permanent. If they are able to scale up really and gear up to act as import substitution avenues, then I think it's a great future for them.
Okay, well, just stay on. We have about 10 minutes left for the day to end, and it has been a good day for the bulls. No two ways about that. Let's take a quick break, but before we do that, here's something that you, our viewers, must take note of. CNBC-TV18 and National Stock Exchange have come together to promote investor awareness through a special campaign, Informed Investors, that empowers you to make all the right decisions with your money. Now, in order to protect your hard-earned money and investments, you need to ensure that you only deal with SEBI-registered intermediaries. Beware of any person offering you fixed or guaranteed schemes, and always remember to check the registration certificate of the broker. The list of SEBI-recognized market intermediaries can be easily accessed on www.sebi.gov.in.